Hey traders, welcome to another poorly lit edition of Charts and Coffee. I think we'll just call this the spring forward lighting arrangement, but welcome to my office. Thank you as always for making it out for Charts and Coffee. Time to caffeinate and dominate. I have already drank two double lattes this morning, so I am cut off from any more caffeine, but hope you all are doing great this morning. All right, so let's talk about what's been going on these past couple of days, and I'm going to make a concerted effort to use TradingView a little bit more in the show because I do have a lot of traders who come to me and say, Rag, I see that TOS is so popular, whether that be here at Simpler or in the free videos and whatnot, but I want everyone to know that whether it be especially on my phone or whether it be on my desktop, my laptop, my iPad, I have TradingView running all the time. I'm a huge fan of the platform. If really for the main reason being, when I want to pull up a symbol, and I'm going to pull one up right now, and I know you won't be able to see it as clearly as I'd like, but I can pull my symbols up. You can see the DPMRs running here. You can see my grab candles running, my multi-chart, my sector slow stow, all that's running on TradingView on my phone. And I don't know of any other platform that allows custom tools to be run on the app. And so I love that. I love that about TradingView. And wherever I am, if I get an alert about an entry and I need to be, acting on it, I need to be able to pull up a chart with my tools to make a trading decision, and I'm away from the desk, right? I'm away from the 8 monitors that I'm sitting in front of, I can make really good decisions. So we're going to use TradingView at least as often as I can think to do it, but I'm always running it and all my tools do work on it. So before we get to TradingView, let's talk a bit about what we're coming up with, what we're going to be dealing with today. We already have the CPI. We'll talk about the 830 hot zone in just a moment. FOMM member Bowman is speaking at 5:20. So not going to be a regular trading hour impact event, but definitely one that could affect the Asian session and perhaps, depending on what she says, rolls into Wednesday. But by then, it probably won't matter a whole heck of a lot because here comes the core PPI. Now, in the wake of, a lot of folks ask me, Rog, what is the takeaway from the SVB debacle? I don't know what you want to call it, but I'm going to pull up the CME Fed Watch tool. And the biggest takeaway here with this SVB narrative, by the way, we're going to be going into the blackout period, right, before the next meeting. But as we take a look at the adjustment, then the readjustment of the rates, they have taken a very, and I will say almost too less hawkish. It's not dovish quite yet, because dovish would presume rate cuts as the near-term action, but it is far less hawkish. And yes, it's probably bordering on much sooner to be dovish because of what happened. I do look at these target rate probabilities as an extreme overreaction, as much as that 6 to 6.25 column was an overreaction to Powell's comments just a week ago today. The move here to the right side, meaning moving more towards 4, the high 4s, 4.5 to 4.75, also an overreaction. We'll probably find that medium ground that we were at around 5%. So be careful with what's happening. Wild adjustments being made on the Fed fund futures in the wake of this SVB narrative. That's where the headline has become a part of the macroeconomic conversation. SVB of its own is not a macroeconomic event. It's a headline. It's a news event. It's a tiny little swan, if you will, a tiny little black swan. But it's not in and of itself macro. Macro is jobs growth, inflation, and what is the Federal Reserve going to do? This one would be a little bit more along the lines of, does the Federal Reserve rethink their hawkishness? Remember, NFP already started walking us towards a less hawkish conversation. So I just want to make sure we're up to date on that. Now, when we look at the PPI here, yeah, we can look at the number, the CPI, sorry. When we take a look at the CPI here, yeah, we can look at the number. But does that mean anything? Not really. This is where it lands. So I'll pull up. Let's take a look at the S&P. And I'm going to pull up the 5-minute chart. All right. And let's see here. There's my 5-minute chart. Look at that wick. Right. That is the 830 hot zone. That's the way it was responded to. Initial reaction was lower. And then in the wake of that, we've moved higher. The S&P has moved higher. What about bonds? Bonds are holding, right? But there's two narratives with bonds right now. Bond was a flight to safety, and yields dropped in response of two things: the flight to safety and a far less hawkish Federal Reserve. That's going to affect the long bond as well. So if we're less hawkish, that means not as high an ultimate target rate, right? And then that's going to be reflected in the 30-year. So we have an inside candle right now. And then finally, what's the euro up to? Euro is very, right now, all over the place, much like the S&P was. Remember, on Thursday, we have the ECB. So this is not only a reaction, a response to what the US dollar is doing. This is also a response to preparing for Christine Lagarde and the ECB. So a lot moving the markets here this morning. All right, so let's get to the questions as always. And first up, Natty Gas. Sure. Let's take a look at what we've got here on Natty. And the question is, when I look at TradingView at a few days of yellow in the lower JT multi, yep, I sure did. Let me show you what that was. We had actually quite a few. We had about 8 days in the neutral, and we've gone, by the way, red again. But we're not making new lows. We're not making new lows on the red. We never crossed back. So why yellow? Remember that Saba, the way in which the multi works, it's actually 4 exponential moving averages. It's part of the lower end of what I used to call the Lazy Days lines, which is my favorite restaurant down in the Keys. And the idea is Fibonacci-based exponential moving averages and their relation to each other. I was actually looking up an old Lazy Days line video that I had on YouTube. It was 14 years old, and it just cracks me up to watch some of that old content. And I remember, wow, we have a series of Fibonacci levels that, depending on how they're structured, which moving average is above or below another, that's how the multi works. And so it's really a combination of those 4 moving averages having gone more neutral than structured bearishly. So we've once again freshly structured bearishly, but this will be far more impactful if we get a brand new low. So it looks like we're still chopping about, trying to find a range as we are in a more seasonally pre-ramp up window in terms of the time of year. Now, seasonal in and of itself, seasonals are not a setup. Tendencies are not a trade, but we do know if we can go back to neutral, if we don't put in a lower low, staying long calls in UNG, which I am looking to get long, maybe on a 1, 2, 3 reversal pattern in the Natty Gas, is going to continue to be valid. So thanks for the question. All right, next up, can we take a look at crude oil? Absolutely. All right, so now we have crude, and we're taking a look at the DPMRs and crude oil. By the way, gang, one of the things I will do, especially if you're brand new to the DPMRs, one of the things I'll recommend you do is open up, whether you're on TOS, this of course is on TradingView, open up the settings. And what I'll oftentimes do, just to make the tool a little less visually maybe overwhelming or distracting, is I'll remove all the check marks and just keep the volatility range. So it looks a lot like, in many ways, the HPMR. It's short-term day trading cousin, if you will. And that's a really easy way to sort of make it less intimidating. And as you need more information, you can check any of those settings. And so if you ever see my DPMRs looking markedly different, it's usually because I think in the beginning stages, unchecking some of those just to get used to the footprint, and then adding another layer and then adding another layer will work. Oh, I am supposed to be in the free trading room. Sorry, gang. Yeah, bot. I just forgot. Yeah, hang on. Let me get in there. Hang on. No, I just completely forgot. Give me one moment here. All right. Hey there, free trading room folks. Good morning. Sorry for my tardiness. All right. So we were talking about the DPMRs and crude oil. The DPMRs and crude oil. All right. So what do we have here? We have a neutral market, right? Now, which way do we want to be favoring a neutral market? This is really straight from the sequence of what I have taught in the DPMR masterclass, and I'll give you all a little insight here. Clearly, once I have the zones, yellow is resistance, right? The gray is support. And then I want to ask myself, where am I in terms of market structure? I'm neutral. We have been neutral for a very long time, right? You see this yellow lower row on the multi. And when I have that yellow lower row, I'm open to trades in either direction. So if I am favoring the resistance up here, right, and you can see here, my sector slow stow is up near the high level, the high range, right? Up in that area, that's the prelude to, if I'm going to do anything, let's put it this way. Whatever you do, don't buy up there, right? If choosing an entry is still sort of intimidating, whether you have new tools or a new process or whatever it is, right? Get in the habit, maybe, rather than having to choose what you're going to do, eliminate what you're not going to do, right? So decision, the root word desir, if I remember from all my pre-SAT preparation, yes, is to cut off. The Latin root is to cut off. I think that process for trading works really, really well. And that means, what is it that I want to cut off? In this case, what am I not going to do? And what I'm not going to do in a neutral market up near resistance is buy. Most of the market participants will, because by far most market participants are momentum traders. They buy into higher highs, they short into lower lows. The more I'd say rarer approach the market is exhaustion trading. Well, they're both good. It's not a matter of which one's better. It's a matter of which one is most applicable to the current market. And that's what that multi does. So right now, Kadar, if the trade that preceded this one was the short, the next one I'll be looking for is a buy. All right. So I hope that makes sense in terms of the overall movement we're seeing as we head down to the Darvis support, as we head down towards the support of the DPMR. All right. All right. So next up, Sadiq asks, can you give me some understanding to a narrow V score and when to go long? So Sadiq, I'll usually recommend, go back to the resources that accompanied the indicator. So clearly you have it. Go back to the resources, and it will usually be pretty helpful as far as what it is you need to do. If we have a narrow V score, and I'm running my DPMR tools here right now, but if we're running, let's see, bear with me here. I probably could pull up. Yeah, let's do that. Let me pull up my volume max. Okay. Let me pull up my volume max layout here on TradingView. All right. And that's the one that has I believe, I saved over top of it, didn't I? Darn it. Let me see if I can get it to come up. I know sometimes I have a terrible habit of saving over some of my layouts. Is this correct? There we go. So the question is, if we have a narrow V score, well, there's nothing inherently wrong with a narrow V score, because remember what it's doing is measuring volume, right? So if I have a narrow V score, you mentioned 9 a.m., It just means that's the range, right? It just means that's the range. So if you're looking at the V-score, which is the blue line here, right? You can see the readings right there. There's my multi down in here. There's my volume label, or sorry, my slow stow, MACD, CCI labels. Okay, so on this particular layout, here's my signal, but I'm not going to do anything at this point because I have to wait for the proper setup. Once the bell rings, yeah, it's really just a matter of finding where the support was. And I would not say there's a clean, I'm not using the V-score in this particular example. 9 a.m. yesterday, 9:30, gang. I think one of the things that I mentioned to traders in the day trading room and also in my Sector Secrets Mastery was we were going to deal with a very difficult clearing range because of the sentiment that we ended with on Friday and the news of the SVB depositors, basically plan. But ultimately, this is a low, right? Going into the open. By the time we get to 9:30, we can see we're actually setting up higher lows on the V-score. That's tough to want to be short, right? So what am I eliminating? I'm eliminating from contention this idea that I need to be bearish. So the narrow V-score in and of itself doesn't tell us anything. It just tells us that we're stuck in a fairly narrow volume range. That's one way you can look at it. That's the way that I'll process that. And remember, when I'm using the V-score, I want to be keenly aware of what's happening with the HPMRs. What's the underlying structure, right? We can never move too far away from that. All right, next up is, hey there, Mr. Walker. Is a red-yellow overbought setup any more or less probable than a double green reversion to the mean setup? I wouldn't say so, Mr. Walker. We always want to take an assessment of the environment, which can sometimes include the calendar, what's coming up on the calendar. And then also I'll look at, maybe it's the V-score to Sadiq's question. Maybe it's a slow stow. Maybe I'm in an HPMR or DPMR. So what we want to do is stack the reasons from a time, price, volume, and volatility perspective. So I can't say on the face of that, Mr. Walker, we have a preference, although I will tell you, I would prefer to be bullish and take advantage of uptrends when at all possible. So if I have a green environment, it's usually going to be right at the top of the list of things that I want to try to set up and enter. All right. So thank you for the question. All right. Hey there, Ann. How are you? So yeah, we took a look at Natty, Euro, bonds. Thank you so much, Ann, for that. Bonds are in an inside candle. And lower bonds are not necessarily today specifically going to be risk aversion. It just could be a wind down of the panic buying that we saw in the wake of SVB. Let's see. Next question is, let's see. I'm taking a look at the free trading room. All right, back to our YouTube channel. Mark asks, GDXJ, sure. Remember that gold is going to move based on the movement that we've seen in the bond market as real yields have been contracting, right? And so GDXJ, I like trading when I have a clear view on what's happening with gold. It's still below the 200. Here's what I will say. When you've got a slow stow reading like this, and you're sort of looking for a move. So there's no slow stow that I need to look. Take a look, Mark. Look at the structure. There's no slow stow allowed it a trend. Had it been overall neutral, getting up off the low, and getting through the mid can oftentimes be a bit of a slingshot. Okay, we could sort of accelerate through that mid, but we're not in a neutral environment, so not a great time to look at a slow stochastic, which is far better off to be used in shop. All right. Okay, gang, as always, thank you so much for being here for Charts and Coffee. We'll be back again at it tomorrow, 9 a.m. Eastern, 9 to 9:20. And I'll keep using these TradingView charts. All my tools are available on both Thinkorswim and TradingView. I like them both. I think this is a great choice for those of you that may not want to use trading Thinkorswim, or may have a brokerage account with one of the other brokers that that are semi-popular here. I mean, Toss is definitely the most popular, but if you have a Tradeovate, Tradier, Interactive Brokers, TradeStation account, AMP account, the reason I bring this up is I don't want people feeling that there is not an alternative to the Toss platform. If you're a member here, it's simpler, which is why I make sure that all my indicators are available on both those platforms. And again, I think having a backup is a really good plan as well. I like having both. All right, gang, I'll see you tomorrow. Same time, same station. Be good to each other. I'll see you tomorrow at 9.